Welcome. This is question 2 of ATD April 2022. Question 2 ATD April 2022. Question 2 ATD April 2022. So ATD April 2022 sitting. This is KASNEB. So KASNEB ATD April 2022 sitting, and this is our question 2. So a question on sole proprietorship. We are supposed to prepare the sole proprietorship profit and loss, and then the statement of financial position. John Dambuki, a sole trader, extracted the following to our balance as at 31st March 2022. So we have capital 100,000, inventory 400,100, and the zeros have been restricted. Purchases, land and buildings, motor vehicle at cost, equipment at cost, accumulated depreciation. We have 18% long-term loan, discounts allowed, return outwards, carriage inwards, carriage outwards. Trade receivables and payables, interest on loan paid, administrative expenses, selling and distribution costs, bad debts written off, bank balance, drawings. Additional information: as at 1st March 2022, the closing inventory was valued at 38 million. The administrative expenses outstanding as at 31st March 2022 was 1 million. Sales and distribution costs paid in advance as at 31st March 2022 amounted to 800,000. As at 31st March 2022, the half-year interest on loan was still owing. Alex Musao, a debtor, had returned goods on 25th March 2022 worth 100,000 at selling price. No record was made in either trade receivables account or sales account. These goods were included in the closing inventory above. The allowances for doubtful debts to be maintained at 5% on trade receivables. And finally, depreciation is to be provided as follows. So motor vehicle and equipment, statement of profit or loss, and then statement of financial position. So that is what is expected of us. These are questions that should take you less than 30 minutes. Now, the most ideal way of doing this question is to always start with the additional information. So for me, the way I handle it, I will look at the additional information, make sure I have everything in mind, and then proceed with the question as it is. But if you think you can forget one or two things, please take note of all the additional information down. This is closing stock. So closing stock, we have it there. Administrative expenses outstanding 1 million. These administrative expenses are supposed to have an effect on both the P&L expense, and also, since it's outstanding, it will have an effect on the statement of financial position as a current liability. So we'll get to that. Selling and distribution costs paid in advance. So this is a prepayment. It will affect the profit and loss, the expense itself, and then the statement of financial position under current assets. As at 31st March 2022, the half-year interest on loan was still owing. It's an outstanding, so it will affect the current liability part of the financial position. Alex Musao, a debtor, had returned goods on 25th. These are just return inwards, because Alex Musao was a debtor. He is a customer. So he returned goods. So we'll have sales returns of 100. And then since no record was made in trade receivables account also, we will have to reduce the trade receivables by 100. Yeah. And then the allowances for doubtful debts to be maintained at 5% of trade receivable. So we'll work out 5% of trade receivables to see if it's an increase or a decrease. And then, yeah, we'll go. If it's an increase, we debit P&L. If it's a decrease, we credit P&L. So let's start. This is John Dambuki, and we are preparing the book as at 31st March 2022. So we'll come here and say solution. Then we say John Dambuki. Statement of financial. We can say income statement, sorry. Let's just say income statement. Income statement is will comprise the trading account and the profit and loss. Then for the year ended, 31st March 2022, like that. Then you underline, and then you can have shillings here, shillings and shillings, like that. So then we always start with the trading account, and the trading account has the trading account will always have the sales, then less cost of sales. So we go straight to the sales, then cost of sales. I'm trying to look for sales, capital, inventory, purchases. Sorry, the sales are here. I think there was a problem with the question. So these are the sales. Sales is 400,100. So we'll come here and say sales 400,100. Since there is we have some workings, it's always good to have it in the inner column. So sales returns, this is 100, you remember, and then we get the balance 400,000, like that. Now that is the net sales. The 100 is from note 5, where Alex Musau returned goods on 25th worth 100,000. Now remember, these zeros are not restricted, so we have to restrict the zeros. So it's the equivalent of 100 at selling price. No record was made in either trade receivables or a sales account. So we are returning them back. We have to reduce the sales by 100. That's how we go about it. Then we go to cost of sales. Remember what we said, trading account is simply sales less cost of sales. And cost of sales, we start with the opening stock. Opening stock is this one, April 2021. So we have 40,000 as our opening stock, then purchases 200,000. So opening stock 40,000, purchases, and let's see if we have workings on purchases. If we don't have workings on purchases, we'll continue that inner column. So just check to be sure. Purchases, do we have any workings on purchases? Any workings on purchases? Okay, for additional information, no workings on purchases. Then here, return outward. Return outward, these are working on purchases. Carriage inwards, it are working on purchases. So we are going to add carriage inwards of 2,000 and then less return outwards. So since we have workings, we are going to have this posted in the innermost column. Purchases is 200,000. Purchases is 200,000. So we'll come here and say add purchases 200,000. And then carriage inward, we add the carriage inward, it was 2,000 shillings, and then we less the return outward. Carriage inward are the costs that are incurred to transport the goods into your premises. Return one outwards, what you have bought, but you've returned back to the supplier, so they reduce on your purchases. So the figure is 1,800. I think you can see them. Let's just confirm. Carriage in was 2,000. Return outward is 1,800. So we are returning back to the suppliers. We have to reduce. So this gives us 200,000. 200. You less this, will get 200,200. So this becomes our purchases. And see now it's the net that we are pushing to the in the central column. And then we less now what? The closing stock. Closing stock. Now for the closing stock, I think that figure, the figure for closing stock is normally not included in the total balance. So you simply come here, additional information, get the information here, and you can see 38 million. But remember, the zeros are restricted, so it's the equivalent of 38,000. We have restricted our zeros here. So that's how it will be. So what do we have? We have 40,000. 40,000, fuck that one, 40,000 plus 200 minus 38,000. That gives us 202 200. So 202 200 like that. Then 400 minus that, we get 197 800. 197 800. So this becomes our gross profit. Gross profit becomes 197 800. Then we add if we have any gains and incomes, we add. Now we have started the P&L account. So we check the question to see if there are any gains and incomes. So sales, purchases, land and buildings. Okay. Discount received is a gain. So yes, we have discount received. Continue checking if we have anything else. That's discount received, and then we have to work out on the allowances to see if it was a reduction. If it's a reduction, it will be, we'll consider it here. So discount received. How much is the figure? In fact, let's first of all check for these allowances so that we can know where to put it, whether in the mid column or the outermost column. So allowances for doubtful debts have been maintained at 5% of trade receivables. This one we just take 5% of trade receivables. So let's check the trade receivables. Trade receivables is looks like there's a problem here because trade receivables and trade payables. Let me just check from the question paper. Trade receivables and trade payables. Trade receivables is 15,100. So this is 15,100 and then 12,500. So 15,100. But there's something about this 15,100. We were told here that no record was made in either trade receivables account or sales account, and goods worth 100 were returned. So it will be 15,100 minus 100, which were returned. We had included there, but the goods were returned. So it means our trade receivables will be 15,000. So then we take 5% of 15,000. This one should give us 750. To give us 750. So 750, this is the figure that we are going to compare, 750 and 850. Allowance for doubtful debts was 850 at the beginning of the year, but now we are going to maintain it at 5%. So 5% of this is 750. So there is a reduction by 100. Whenever we have a reduction, we credit the P&L. A reduction in allowance for doubtful debts. If it was an increase, say from 850 to 950, we will have debited 100 in the P&L, we will have included it under the expenses and losses. But since it's a decrease, it's as if we have gained. So that's why we are actually including it here. So now that we know we have two items, discount received and reduction in allowance for bad and doubtful debts, the best is to have them in the inner column. And reduction in bad and doubtful debts, we've seen it's reducing by only 100 shillings. So the discount received was 2,800. So remember, discount received is a credit. That's why we're picking it from the credit side. So 2,600 plus 100, that gives us 2,700. So we'll come here, put them there, and then add to get the total. So 197, 2,700, that gives us 200, 500, like that. And then we less now the expenses and losses. So we go back, get all the expenses and losses. And we'll start from inventory, purchases, land, capital, equipment, 18% long-term loan. I think that's our starting point. 18% long-term loan. So this will be 0.18. 18% 0.18 times the loan itself is valued at 25,000 times 25,000. So 18% long-term loan is 4,500. That's our starting point. It's an expense. The interest part of it, that's what we are interested in. Expenses and losses. So 18% loan, we're talking of 4,500. Basically 18% of 25,000. That is the loan that we're supposed to pay for that particular year. How much we paid, how much is still outstanding, I think that's a question that will get a lot of insight when we talk about when we go to the additional information. But at least we know this is the expense for this year, so we have to capture it the way it is. Discount allowed 1,600. So we'll have discount allowed 1,600. Allowed is a loss 1,600. Then go back, check. We have discount allowed. Carriage outward is 3,000. So we come here. Carriage outward 3,000. Carriage outward is 3,000. Like that. Then we go back, pick others. So carriage out was 3,000. These are balance sheet items. Interest on loan paid. Interest on loan paid. So this is what we paid. Interest on loan paid. We paid 2250. So it means the remaining. What was paid is 2250, but the interest is 4,500 as per the question. 18% of loan of 25,000 is 4,500. So we paid 2,500, 2,250, and the remaining is unpaid. I think it has been captured in the additional information. Let's check. That's number 4. As at 31st March 2022, the half-year interest on loan was still owing. So you can see the interest was 4,500. How much was paid? 2250. So what was remaining is 2250. This is outstanding. But since we are interested in the annual expenses, then we'll capture the 4,500. So that one goes without saying. Now we continue. Administrative expenses 80,000, and there is note 2. Administrative expenses outstanding as at 31st March 2022 at the end of the year was 1 million. 1 million, there's a 0 here, sorry. There's an additional 0 here. So this means administrative expenses 80,000, outstanding is 1,000. So we'll come here and say administrative expenses. Administrative expenses. Since we have workings, we just say 80,000 in the inner column, and then accrued or outstanding is 1,000. So then the total is 81,000. Like that. That's how we go about it. Then we go to, so the total, what was paid was 80,000. What is still outstanding, though, for the year is 1,000. We add, we get the total. Then where we sales and distribution costs 30,800. There is some adjustment here. Sales and distribution costs paid in advance was 800. So sales and distribution 3,800. This was paid in advance for the following year. So it means we deduct. It's not money for this year. So we deduct so that we get the correct amount for this year. Remember, accounts are maintained for a certain financial period. And remember also the accrual concept of accounts. So sales and distribution costs, we'll come here and say sales and distribution costs. Sales and distribution cost. Just like this one, we have 30,800, and then you have the prepaid sales and distribution cost, which is 800. So we get 30,000 like that. Then we go back, continue the journey. Bad debts written off. Bad debts written off. How much is that? Looks like there's a figure missing there. Bad debts written off is 1,500. Sorry, that figure was missing, but it's in the question. So just check on your question paper. Bad debts written off 1,500. So come here. Bad debts written off 1,500, because it doesn't have any workings. We push it right there, And bank balance, no, this one doesn't have that any effect. Allowance for bad and doubtful debts, we are done with that. It's a decrease, and a decrease is an income. Right, basically finds itself in the credit side of the P&L. We treated it as a gain. Bank balance drawings, this one don't have, affect or don't appear in the income statement. So then, let's check again on the additional information just to be sure. We've captured that. Number 2, we've captured. Number 3, we've captured. Number 4, we've captured. Number 5, we have captured. Number 6. Number 6, we've captured. Number 7, depreciation. We've not captured depreciation. So depreciation on motor vehicle and depreciation on equipment. We have not captured the two, so we'll come here and say depreciation, motor vehicle, and then equipment. So for motor vehicle, we have 25% straight line, so it's 25% on cost. Straight line is always on cost, so on cost we mean at cost. So 25% of 80,000, that is 20,000. So because all of them are depreciation, we can choose to have them in the innermost column. And then for equipment is 20% reducing balance. 20% reducing balance, what that means is that we'll take 20% of the cost minus accumulated depreciation over time. So in this case, it will be 20% of the cost of equipment is 36,000 minus accumulated depreciation is 7,200. That is the accumulated depreciation over time. So this is 20% of that 6,000. That 6,000 minus 7,200. That gives us 28,800. 28,800, like that. And 20% of that is 5760. So 5760 will be our depreciation for equipment. So 5760, and this totals up to 25,760. So if there's no any other thing, as we have checked, we add all the totals. So we start with 4,500 plus 1,600 plus 3,000 plus 81,000 plus 30,000 plus 1,500 plus 25,760. That gives us 147,360. 147,360. So because these are all expenses, we less from the gross profit and incomes. So that's 200, 500. That gives us 53,140. 53,140, and this becomes our net profit. That becomes our net profit. So net profit 53,140. So that should mark the end of the first part, 12 marks. We go to the second part immediately. John Dambuki. We start the second part. John Dambuki. Statement of financial position. Statement of financial position. Financial position. Then we say as at 31st March 2022, like that. And as usual, we'll have the 3 columns: shillings, shillings, and shillings. And then we start with the non-current assets. Non-current assets. Now we have 2 non-current assets. We have motor vehicle, and we also have the equipment. And we'll check if we have any other. So here we have the book value, we have the accumulated depreciation, and then you have the net book value. So motor vehicle, what's the value for motor vehicle? Motor vehicle is sales, inventory, purchases, and there's also land and buildings at cost. So we'll also include land and buildings at cost, 60,000. So come here, land and buildings at cost, buildings at cost. So this is 60,000 and there is no depreciation on it. So the net book value will still be 60,000. Then for the motor vehicle, let's pick motor vehicle. Motor vehicle is motor vehicle, we have how much? This is 80,000, and then it had accumulated by the depreciation was 20,000, and then the depreciation for this year, which is also 20,000, so that makes it 40,000. So accumulated depreciation as at the end of this year is 20,000 plus 20,000, that makes it 40,000. This 20 plus the 20 that we have just calculated here, the depreciation, this one. So we'll come here and say motor vehicle, 80,000, and then accumulated depreciation is 40,000. 20,000 before, 20,000 for this year. So we less this, we get 40,000 here. Then we go for equipment. Equipment, the value at cost was 36,000, accumulated depreciation 7.2. So 36,000, we'll come here and capture it as that. 36,000. The depreciation is 7.2 plus, that was before this year, but now this year it depreciated by 57.60. So it will be 7.2 plus 57.60. That gives us 12,960. So 12,960. Here we'll have 12,960. So 12,960 minus 36,000. That gives us 23,040. 23,040. Then we add all 23,040. That should give us 123,040. Then we go to current assets. Current assets. So let's pick the current assets. Current assets, we start with so far no current assets. So far no current assets. Trade receivables. Now our trade receivables will be our past current assets. So trade receivables. Remember, trade receivables is 15,000 minus now the provision for depreciation, which has been set. Now it will be 14,250. Remember, it was 15,100 minus the 100 of the goods that were returned to remain with 15,000, and then we had now maintained allowance for bad debts at 750, which now makes it 14,250. Then we proceed interest on loan, no. Bad debts allowance, bank balance. So bank balance we have 3,000, and then there's something here, prepayments. Yeah, number 3 we have prepayments. This is 800. Yeah, prepayment 800. I think that's the only one. So bank 3,000, prepayment 800. Bank 3,000. Prepayment, it was prepaid insurance, I think, 800 shillings. Then of course we have inventory before we forget. Inventory, which was 38,000. 38,000. We've just seen it here. Inventory 38,000. It's here 38,000. Remember the zeros are restricted. Sorry, it was not prepaid insurance. It is prepaid selling and distribution cost. So it's prepaid selling and distribution cost. So just come here and delete this to avoid confusion. Prepaid selling and distribution cost, like that. So this should be able to give us a figure: 14,250 plus 3,000 plus 800 plus 38,000. That gives us 56,050. Then we go to current liabilities. For current liabilities, what do we have? Go back, pick the current liabilities. So we have outstanding interest loan. I think we start from there. Outstanding interest loan, then trade payables, 12,500. So we can start from there. Outstanding interest loan. Outstanding interest loan. Remember, it was 4,500 less the 2,250 that was paid. So we have 2,250. And then we have accounts payable. Accounts payable, 12,500. I'm picking these figures right from the question. Accounts payable is 12,500. It's here. Trade payables. It's here. 12,500. Interest on loan paid, we've already worked on this. Administrative expenses, there was an outstanding. So administrative expense outstanding, 1 million. So we say accrued administrative expense, 100. It's a liability, a current liability at that. Accrued what? Admin expenses, administrative expenses. That is 1,000. Like that. It's 1 million, but the zeros are restricted, so it becomes 1,000 equivalent. Then we continue. Trade payables, admin, allowance, back drawings. No. Check. Allowance for bad and overflows. Okay, I think we are done. So let's get the total. This total will be, this is 13, 14, 15, 15, 750. I think it's pretty easy one here. So 15,750. So we'll work of 123,040 plus 56,050 minus 15,750. That gives you 163,340. 163,340 as our net capital employed. So my prayer is that this thing balances. Without drama. So finance by section. We'll say finance by section. We start with capital. Capital, since this is sole proprietorship, normally it's capital. So capital 100,000. Then after capital, we'll add what? 100,000. Yeah, 100,000, capital 100,000. Then we have, so we'll go to finance by capital. We say 100,000. And then we add the net profit. Of course, the net profit, we are getting this from the previous book. So the net profit is 53,140. We are going to add here 53,140. And then we less the drawings. Which are on they are in the question. So drawings is how much? Drawings is 15,000. So we are going, this is money that was withdrawn by the owner of the business. So we less 15,000. So that gives us how much? It is 100,000 plus 53,140 minus 15,000. This gives us 138,140. And then now we go to long-term liabilities. Long-term liability, and under long-term liability we have 18% loan, which was at 25,000. So this one you just put it here. It was 25,000. Let me just get the figure. The loan was, get the figure. The loan is how much? Long-term loan 25,000. So we simply come here and put the 25,000 like that. Then we add. What do we get? This gives us 163,140. Wow. There's a small difference of 200 shillings. Net capital employed. So our net capital employed are not balancing, but this is a small deal. So we just go back and check where maybe we might have gone wrong, either the computations or maybe we've left out something. So let's just check out this before we can close this. So we just try to find out where the mistake could be. This is not balancing by 200, so it means there must be an error somewhere. Not balancing by 200. So normally what happens, you check the computation or you check the figures. Maybe you have inputted the figures wrongly. So I'll just want to check my figures. Sales 400, 100, yes. Opening stock 200,000, carriage inwards 2,000. I'm comparing this with what is in the question paper because there was a problem. So return outward 18, carriage inward 2,000. Yeah. Discount received. So there's a problem here. In fact, we've already got the problem. Discount received. Discount received is discount received is 28, and we captured it wrongly. Discount received is 28. Discount received 28. So sorry, this is the problem. Discount received is 2,800. So that's where the problem is. Discount received 2,800. So that means this one will be 2,900. Yeah, sorry for that. 2,900. So it means here we'll have 200, 700. This will be 700. If you add those, you'll get 700. Then we come here. This one now will be 700 minus 360. Yeah, 200, 700. So this minus this. Let's just do it. 700 minus 360. That gives us 340. Yeah, so this is where the problem was. So we'll come here. This is 340. 340 like that. So if that is 340, so it means we are going to use this figure again here. So 53, 340. So 53, 340. What is the lesson there? That make sure you capture the figures correctly. So if this is 53, 340, this one will also be 3, not 1. So this is 3, and so we'll get this figure here as 3. Please capture, check your figures, let them be correct. That should be a lesson to you, that you need to be very keen, very accurate with the figures. Make sure you capture them as they are. So with that, I think you can see we've learned our lesson. Don't know the hard way. Sometimes some of these things might not be that easy to get to where the problem is, but we thank God that's a lesson. So net capital employed 163, 340, net capital employed 163, 340. So this is balance, and this should give you the 8 marks that are stipulated, that are in the question. So that is it. That is how you go about this question should you have it in an exam. That's how to go about this particular question. So thank you. Thank you. Can share and subscribe.